I was wondering what you think about that and kind of what sort of shape of recovery are you expecting?
I find it interesting. I think it's not going to be as optimistic as what we see from the expectations of investment banks and the international bodies. I think it's going to be a much weaker recovery, fundamentally for three reasons. The first one is the accumulation of debt that is going to make that so many corporates have to decide in 2021 to take drastic measures to rein in the balance sheet and to improve their position, their solvency position, which is going to significantly impact the capital expenditure, the investment landscape. I think that the other problem is huge levels of government debt are going to drag on growth because most of the deficit financing that we have seen in 2020 has gone to perpetuate imbalances that already existed in 2019. It's not just to aid the economy. Most of it has been to perpetuate current spending. And that obviously doesn't help in terms of the recovery. The third, in my opinion, is that most of the expectations for 2021 that we're seeing out there that have between 4 to 5% recovery in global growth and a very abrupt, very aggressive bounce of the Eurozone and US economy estimate multiplier effect of stimulus plans and monetary policies that has never existed. It's unprecedented. So we need to be extremely cautious about things that have never happened because they tend not to happen. My view, therefore, is that what we will see is likely a K-shaped recovery. K-shaped recovery means that we will see some sectors thrive, technology, everything that has to do with high productivity, everything that has to do with fresh foods, recovering very quickly, even faster than the September to December period, and more importantly, even higher than they were in 2019, while small and medium enterprises, industrial sectors, everything that has to do with sectors that already suffered from weak margins and overcapacity in 2019 and 2018, those are likely to see the low part of the K.
So what should we be expecting from some of the major central banks in 2021? We know interest rates from the Fed and elsewhere already at the lower bound, already at rock bottom. Where do they go in 2021? Do we remain low for a considerable amount of time? Will we continue to see further stimulus, or are we edging back towards normalization?
I think that the prospect of normalization is non-existent, in my opinion. Central banks have already said that even if inflation starts to pick up, they will not change the path of their policies until it's a prolonged period of above 2% levels of inflation. In any case, if you look at velocity of money and if you look at the trends of inflation expectations, the reality is that it's very unlikely that we will see a sustained increase in inflation, at least at the level of official CPI. Definitely a big increase in prices of fresh foods, education, healthcare, which is another of the reasons why the economy will not grow and not be as robust into 2021, because despite low rates and massive liquidity, the most important expenditures of an average family, of an average household, are rising well above real wages and well above disposable income. So my opinion is that what we are likely to see is central banks being aggressively more accommodative, particularly from March to the end of the second part of the year, because the slowdown in economic growth is going to be very evident by then. And I think that we will continue to see very aggressive stimulus packages, very aggressive rate cuts. We are likely to see negative rates in the United States, and it is basically full Japanization following the path of the Bank of Japan.
So overall, it sounds like you're pretty cautious when it comes to the recovery. That's not necessarily reflected in terms of asset prices in the equity market. We're seeing some of the averages in the US hit all-time highs recently. Really optimistic about what's going to happen in terms of the recovery next year. Do you think that the stock markets are overly optimistic?
Stock markets are overly optimistic. I think if we look at the level of bullish to bearish ratios and the different metrics that we all look about optimism in equity markets, it is clearly an environment right now in which we have seen the most optimistic expectations from investors in the last 20 years into recovery. But that is normal because it's based on two factors. One is the obvious base effect. 2021 in the first quarter is going to see some amazing base effect figures. We're going to see plus 10, plus 15% figures, basically because the previous ones were coming from a slump. No, the base effect obviously generates a certain level of confidence. I think also the fact that central banks have been so adamant about the fact that they will continue to support the economy no matter what is something that keeps investors relatively happy. And despite the elevated levels of debt, the fact that investors see that governments are willing to spend into the recovery also generate a certain level of excess optimism. I think that the problem is that it's too optimistic. Not that any of those factors are incorrect, but that the expectations of investors are too aggressive about earnings growth, about economic growth, and about the recovery in general. So that's why I think you have to be prudently exposed to equities, to bonds, and to commodities, but you also have to take into account that as we saw in 2018, as we saw in 2019, and as we saw in the previous crisis, you have to be very selective. It does not work equally for European markets, for US markets, for technology, for cyclicals, or for oil or other commodities.
Now, in 2020, we've seen some weakness come through for the US dollar after essentially a 2-year bull run for the greenback. But you think that this weakness story has been overplayed. Tell us why.
Well, fundamentally because history tends to repeat itself when the measures that are implemented are the same. And if we look at the 2009 to 2019 period, the reality is that all bets expecting the dollar to collapse didn't happen. And this time is not different because, in fact, this time what we have seen is that the response from governments and from central banks all over the world has been so aggressive that global debt in US dollars has soared, that the demand for US dollars has soared. So I think that the idea that the dollar is going to collapse first did not even happen in 2020. If you look at the performance of the US dollar relative to the vast majority of currencies globally, it has actually strengthened in terms of the emerging market currencies, etc. It has basically just weakened recently relative to what? To the euro and the yen. Based on what? On expectations, like in the previous crisis, of a very rapid and strong recovery of the Eurozone and Japan. And reality kicks in afterwards. So I think that particularly relative to the euro, and particularly considering the rising imbalances in foreign currency that emerging economies are taking, I would be at least prudently viewing the US dollar to remain within the framework in which it has moved in the past 10 years, which is between 90 DXY to 100 and a little bit, not much more than that.